Greetings, market rebels. Welcome to this week's macro measure video combined with the sector situation. It is Friday, January 16th, 2026. It is, let's see, 4:39 p.m. here on the East Coast. Here's the market rebellion. Trusty disclaimer. Here is the trusty intellectual property rights notice. And again, welcome to rebels and market watchers alike. This is last week's slide. I am not going to belabor this. I'm going to note up front that I really have had virtually no time to prepare. I've had a really busy afternoon for a variety of reasons. Let's just say stuff had to get taken care of. And so I took care of some stuff and it just made it tough. I didn't even really have any review time. Most of this is going to be from memory of what I saw the last time I looked at charts. So hopefully my memory won't be too bad. But anyway, this is last week's. We said fresh start, sunny skies. We did have a good start to the year in terms of that first week, but this second week really wasn't a great week. It started out fairly well and it threatened to do more, but in the end, I would call it a disappointing week, and that's why this week's slide, I'll just leave this up for just briefly in case you want to refresh or whatever the case, take a snapshot. Anyway, this is all we have. I went with a clean slate. Let me just note, right, I still think it's just, again, super duper interesting times to go back to the 70s. Just crazy. There's so many things happening at such a breakneck speed that you don't know what's coming next. And stories that would normally have weeks of life cycle, maybe in the good old days, as they are called, those are happening in less than 24 hours. So the news cycle just continues to accelerate under this administration. With me, you always should be going at 2x on the playback speed and then slow it down from there because I have the attention to detail thing that just too many things pop into my head that I try to incorporate, and it can get a little drawn out. Anyway, uh, this was a long week for me. There's too much to go into, very little time to prepare, very little time to go into it all. So I'm going to go straight to the charts after just mentioning a few things and a stream of consciousness and just do the best I can. I do hope we talked about this in some webinars. We've been talking about IWM and ASTS, and there was some really good run in those names again this week. So I'm really hoping that some players that watched the video got involved in that. IWM was in our UOA Pro service. We did not have any recent, unfortunately, UOA to trade ASTS. I traded ASTS myself, and I traded some other small caps, and I'm fortunate, but I basically used my discipline and the lack of time that I have to really watch things because of all the responsibilities. I just um, took profits, in a good way out of discipline and again time. And I was probably fortunate to do that in most cases. Sometimes they kept running, but I just can't get it all down. It's just too many things going on for me in my life, but to really work it all out a different way. Anyway, I'm just going with nuts and bolts. So my summary for the week is what should have happened didn't. We did not have the kind of follow through. There's some ominous things that started happening in the charts, which is why I'm going with last week's was sunny skies ahead, essentially, and now we're talking about the clouds rolling in. People hate this. They want you to make calls and stick with them. That is exactly the wrong thing to do in terms of being an active trader, in my opinion. If you're an investor, it's a different story. If you're a position trader that takes things for 3, 6, 9 months, maybe even a year or two, that's maybe a different story. But being an active trader is what we do in most of our services. They're mostly short-term oriented, and for that reason, I don't think sticking with things that once looked good that are now looking troublesome is the way to go. So yes, I'm going to sound a completely different tone this week because the markets themselves are telling me to the best of my ability to analyze them at last look, whatever that was. Anyway, the megas, which we were looking at saying, okay, there's some rotation out of those, maybe because they became overvalued, maybe because people want to broaden out because they think the economy is going to start broadening out itself. We're finally going to get a recovery that can be felt a little bit on Main Street, hence the IWM bullishness that we've seen in the charts and the setups that produce the as close to table pounding as I get, bullish take on things that we wanted to go with if it were there, and talking about how much catch-up potential that it has, and it still does. The problem is that that's looking more concerning than a rotation right now to me when I look at the megas. Well, when I did look at the megas, we'll look at them again shortly. Diamonds may not be a bull's best friends, and there is an analog to when we did get smashed before. So this is becoming concerning on major index ETF level as well. AAII, other things I saw about public being long, the public buying in, the public's exposure to growth stocks, this, that, and the other thing. Basically, the consensus that I told you, I think last week that I was concerned. I'm always concerned when I'm really right smack dab in the middle of the consensus or under the consensus umbrella. And I feel like that's when you've got to keep it up, right? You've got to say, we said maybe it was too easy. This was mentioned last week. Maybe it is or was too easy. And there's also a lot of leverage out there for longs and the percent longs of people in certain stocks and how stocks are behaving. It looks really good. You're getting some of the best readings you've seen in a while. So, did we, in all these fronts and others that are similar, did we get a little too obvious to be long? And did we get a little too much good performance under the surface of the indices and especially under away from the megas? And is that the problem, right? That we're just not ready to go when you lump in all the other Trump administration stuff that's happening, excuse me, and so on and so forth. There's definitely a lot that's different that could happen. There's a lot that could happen at any time. Something we've really drumbeat for as long as I can remember since Trump's this term started. Just because that's the nature, I think, the nature of Trump. But so I'm just going to cut to the chase now and just say, look, just get your DEFCON shields back up. You've got to do that, I think, right now. It is not a This is not a time where I think you act as though it's everything's wonderful because things have really shifted at last look. So on that note, that's the end of the slides. Let's go right into the charts. I'll move these to the side, out of our way. Hopefully we'll be able to move this stuff out of our way, get back to looking at this chart on screen one, which is our main chart. So what I'm going to do is I'm going to bring up the mags individually before we do anything else. Okay, and you tell me, right? If you tell me if you agree on the ones I bring up, right? Other than maybe a clear out, right? Which would maybe be reversed with news developing. But other than a clear out here of this low and a reversal with a kind of a quick double bottom, I'm not sure what you could like about that. I don't like the way this stuff looks on all the this looks on all the complexions that I like to look at. So that's my problem in Apple. I don't like it. We picked it last week to in Rebel Pit Pro to hopefully be a decliner for us. It worked out great. Fortunately, that's what we try to do. Ideally, if we can find four names that we like in different ways, that a few look really good on the bull side and a few look vulnerable on the bear side. That's what we like because that way, if the market does make a strong move and those stocks move in accordance with the market, that folks are getting what we want, which is to teach people to trade with the market's wind at your back because it's easier, we feel, to do than to trade against the market. So at least the theory being at least half of those names should work out well, but you can't always guarantee that. You just don't know news, etc. But anyway, a big name, Apple, that looks vulnerable. That looks like it could trade down to that rust-colored 150, which is another $10 down. So that's a big weight right there. Amazon, right? This to me should the way that things are shaping up, you would think this would run. It's not as bad. It is running into on the downside that it's dropped now. It is running into a rising 20 there in blue. Let me get back to a pointer here. That's I know folks prefer to have the large pointer, which is why I made it this way. But really, right, this is a big dog, and it could be backing and filling back towards a level that was critical at the 235-ish range or near there. That's fine. Hopefully, this will hold here at a higher low and start to go. If you're a bull, you want to see that. But again, that is not looking that great, right? They really brought it back with a lower high from this breakout attempt here that failed. And now, right, if the market starts getting dragged down, it may too get dragged down further. You might see it test the 50. You might see it test the dash white line, which is the 100 near 230, which again, this isn't catastrophic, but it doesn't really help overall when these are really getting hurt to this degree. Now I'm just going to back into XLY. Again, decent barometer for risk on as far as some of the sectors go, and it did not have a great week. It's really right back from whence it came. So not the end of the world there either, much like Amazon, but not that great. So that's that. There's your stream of consciousness where one thing leads to another. Let's get to Google, which we had as a bull this week. Started out, worked out really well early in the week. Fortunately, we got the ideas out on Monday. I think aggressively, the thing did ramp up, and so people had a chance to make some money as a bull initially. But really, this came all the way back in pretty much too. So even what's been a world beater, right? Google's just been remarkable. I believe it made a new all-time high, right, this week, and it did. And I still think it's got some of the best looking charts overall. It did get overbought though, and it is overbought. So it would not be without precedent, right, for a stock that's been overbought to pull back a little more if the whole market itself is doing so, which would be yet another, kind of like yet another breakout that doesn't really sustain for very long. That's been the nature of the beast here. We've seen a lot of those things happen. That's really been more of the case than not. Meta, not looking good, right? This thing's below all the SMAs, as you can see. Maybe right the EPS starts in here and other names. This helps to start lifting things, but that didn't help the financials this week. They didn't really get right what they typically do. They did look like they were on their way to breaking out. There could have been that possibility, but they didn't deliver the results that people wanted to see, apparently. So this to me ends the week rather poorly with declining SMAs and the shorties. Even the 50 is declining again, it looks like. And so not a good look. Looks like it could come back in and test those lows that it made a few months ago, right? So these are all your big dogs, right? These are your heavyweights. Microsoft barely removed from the lowest low it's made in some time. Let's see how far back you have to go to find a lower low. So you've got to go back to, let's see, it looks like you have to go back to the spring, right, to find lower lows than here. So not a good look. Again, look at your SMA profile because it's easy to spot and see. Even the 100 is declining clearly, right? So this does not look good. And I feel like a lot of what we saw from a lot of the assumptions that were made about Microsoft and other players. I feel like Google has been seeing that shift of people heading into it and out of some of these names. But who knows? I can't say that for sure. I don't have the statistics on it or data or anything to share. Just my sense. But is it oversold? Yeah, I'll say that. It's approaching oversold. But right, not a good look. This is not what you want to see if you're a bull, right? If you're a bull, you want to see this in this mode here where your SMAs are stacked and sloped nicely and it's just powering, right? Almost day after day. We're not in that. We're in more of a corrective mode, a give back mode, and you've got this gap way back here, God forbid, if that were to fill, right? That's way down there. So I don't care about those, as I say almost every time, but there's multiple gaps back there. And my only concern is when you're returning back to the gap, that's when I start paying attention to it, when you sort of get within visual striking distance. And to me, you're not far away from that, where if there is a risk off market, you've got to be concerned about that. Remember, we keep bringing up the fact that, yes, it's been great to be long silver and gold, especially silver. And we've been talking about that for 3 years, that's a smart move to make. At least put some money in there. We've been trading it from the long side in UOA Pro and other services. But what's that telling you? Again, we have to keep going back to, I don't know if I have that as a concise answer, but it's telling us something. And I don't know if it's ultimately it could be a good thing, but maybe in the short term it's disruptive, whatever is exactly happening there. Or maybe it leads to other things. So that are not on the radar of most players, or I should say investors in this case. Anyway, there's Microsoft, a key name, not looking good. Let's jump to Netflix, right? Looks can't get out of its own way. They keep trying to seemingly keep trying to bottom fish, and it doesn't work. We had to put it in a few times. It's not even been able to get above our trigger and hold on all these bottom fishing excursions that the UOA's had. And that's why I try to always list if you're going counter trend, you've got to be careful. And there's a reason why I say that on almost every idea that I put in that's counter to trend, because it is the harder, well, in my very strong opinion, it's the harder harder side to trade from. There are times when you can catch lightning in a bottle, and we do attempt to do that at times, but this is why I always say it has to hold the trigger level. You got to get in, make sure it holds the trigger level. Number one, want the market swing at your back. Number two, and number three, when you realize this does not look like it's going to hold the trigger level, or it's back below the trigger level, and I don't see a good chance of it reclaiming it, you either need to neutralize your deltas and other Greeks as best you can, or simply get out and get ready to reload at some point because trends persist and you don't want to be on the wrong side of them. Know it's counter trend going in and treat it accordingly. I write that almost every time I put in an idea like that. Here's Tesla with the lower high right here. And now, right, you can see that if this 100 gives way, this could start to tail off towards these lows and the 150 SMA in a risk off market. And we can also see that the SMAs are starting to roll over here. So this thing's at risk. If this low gives way on a closing basis in a risk off market, this is also at risk. Obviously, a really big name. Let's take a look at JP Morgan, a big name, not really a pretty candle, right? Tried to rally, got hit back down pretty hard today. You can't rule out another leg that takes you lower towards the 150 or worse towards that purple 200 down there where the Bollinger Band resides as well on the downside. So that could retrace more, right? The XLF has been disappointing. XLE, by the way, stalled as well. Didn't fall apart, but we were hoping that we could have XLF, XLE, XTN all participating. It didn't last very long because XLF couldn't get the job done and stay up there. But Morgan looks somewhat concerning. I don't think it's terrible yet, but you lose that 150 in rust near 303, round it off to 300 because it's the big round number. You lose that, you're probably heading down another $10. Which again, not the end of the world, but you could have a serious sell-off in the market happening while this is happening. So percentage-wise from where you are now to trade down to there, pretty steep, and certainly fairly steep from where the all-time high was at 337 just a few weeks back. So there's that, and then I think we had BRKB that we take a look at from time to time because of it's a big weight, and you can see that is clinging to the 150 SMA and Rust. It's the last of them. So when you look at this as a package, I think it's pretty hard to say, yeah, I feel great about this. I would flip the news around and say, at this point, it almost looks like these are predisposed as a package to go down. And it's going to probably take news to avoid that outcome, avoid that path, in my opinion, at this juncture, right? Again, we're always gonna remain open. You form your opinion, you trade it. When new information comes in, if you need to modify, you do. If you need to reverse, you do. Easier said than done, but that's what traders do anyway, or at least you don't stick with things that are problematic. But there's a lot of big weights we just talked about, and that looks very concerning. And what's worse is my messy charts. So let's see. Let me see if I can. Let me see if I can get. There may be another chart. Why am I not getting that other chart though? Hold on one second. Let me see if I can pull up. I want to try to pull up a little bit cleaner of a chart. That's all I'm really looking to do. Yeah, this will work for us. This is why I have this on my in the setup that we're working with here so we can get a clean chart. But this is really the pattern or the structure. And when I say that what should have happened didn't, right? You have the breakout attempt, you fail. You come back to the support line, which we have there in that pinkish color. You break out, you come back, you hold. You start to go, it's looking good. You come back again, fine, you hold. Now you have this really feeble rally that doesn't make a new all-time high. It fails below there, and now you end up coming down back towards key support very quickly. So, in other words, if this was a leg higher and there was a little bit of a pullback here, this is really a pretty bad way, the last two sessions, that is, to get another really impulsive rally going that starts pushing us into new all-time highs. It's not a good way to do it. So this is looking sketchy to say the least right now, I think, because it did not follow through. Now we come in Monday, there's big Trump news that's positive instead of being negative, and or something else happens that's irrespective of Trump, and maybe you do get this thing to get back on track, which would be nice. But these other pattern, the other pattern we talked about, which some see with an inverted head and shoulders, some are going to see the ascending triangle, right? Some are going to see something that almost looks a little bit like a diamond, where and I'm kind of like really loath to draw this, but I'll sort of take my cursor where you would sort of say from here to there, from here to there, and then, right, you kind of get this diamond-esque formation on the other side, other than this failed, what's looking like a possible failed breakout attempt. So that's not what you want to see show up. Diamond patterns are, I think, in the Edwards and McGee book, written, wow, I'm going to say 90 years ago, roughly speaking. I can't remember, or at least published 90 years ago would be in my ballpark, 80 to 90. They were always mentioning in that section of the book that how this can really, a diamond breakdown can be a big problem. And I've observed them from time to time. They don't show up a ton. They do show up, but they don't show up a ton. When they do, I have seen horrible breakdowns form. And so this hesitation here, it might be prudent hesitation for all we know. The problem is, right, why it's such a tough read right now is because what's the VIX doing? Right? Is the VIX really doing much? No, it was, but look at how it finished the week. What about VXX, right? The shorter term. But again, this is just barely off the lows. So I don't see anything really concerning there to say, well, this happens imminently. Whatever's brewing out there, it's not that it can't. It's just that right now, uh, right now, it would seems like it would be a very significant surprise for the market, the way the market doesn't seem to have reacted. We did not see a lot of index ETF put buying of late. We haven't seen that much sector ETF put buying. We haven't seen that much VXX or VIX call buying, which we don't always see, but sometimes we do, and it can be a little bit of a heads up that we did see somebody's getting more and more concerned, but the price is so low in VIX. Well, I should say the level is so low in VIX that it's kind of like, well, what's the big deal? But so why are you going to DEF CON shields up type of a status? It's because I see those big dogs and things happen quickly. And those big dogs that we reviewed to start our chart walk here, that is concerning to me. With all those looking as a package on balance as being vulnerable. If you get more data here, if we get more data, we might be able to get a 10-year daily. And if I do, I'm starting to see something that I saw online, and I'm agreeing with it, and it's starting to remind me of this, right? In other words, let's see if I can put like an ellipse around things. So this right here, this is I forget who published this, but that sort of is getting reminiscent of, and I'm not really that great at drawing the ellipse, but that is a little reminiscent of that. If you look at those two things, there's definite similarities to them, especially right this break here. Let me try to make this a little bit bigger if it lets me. And I'm sorry for I don't know if the white is helping or hurting. I hope it's, you know what I'll do? I'll just make these clear. So, oh, there should be a none. Maybe not. What would look better? Let's see. Okay, maybe blue makes it show better. It's a little bit better. I don't know if it helps. I'll try it here just to be consistent. Hopefully it does show up better on your screen. We do this. Okay. That's worse. So yeah, it's got to be. It's got to be a little more of a blue color, something like be this one here. And that's worse too. You have to have the latest, later ones. My bad. I keep trying to find there's sometimes there can be a middle ground, but that's not even right. Whatever, you'll get the idea. And this is my last attempt anyway. Let's do something like light blue right there. Okay. Okay. So that's closer. But yeah, you could see this false breakout, failed breakout so far issue, and it's reminiscent to me, as someone pointed out online, of this, where hey, you kind of have this ascending triangle look, you kind of have this sort of diamond-esque situation that's not really a super clear diamond, but something akin to that, and then you start to not follow through, and then you get this, right? Then we get that really kind of ugly uh, sell-off that we got in the winter of last year. So this really upends what I was thinking. But the market conditions are, that's why I don't go on my opinion. The market conditions are going to ultimately dictate what I do. And I'm definitely more concerned. I don't think you throw in the towel and say, "Oh, and the bull's over for now." You need to see a breakdown, and things can change right back. Right, if you get good news, they hold this thing here. You really don't break down. They start going sideways for a little bit, start working it back up. Everything will be, back on track. But as it stands now, with those big dogs looking vulnerable, I think that's your big problem. If this rotation isn't over, right? And there's people that are just continuing to lamp these stocks as a package on balance, as I continue to say. So the IWM, we'll skip over to that because that was more cheerful, right? One thing I want to mention about this is that we had a projection in here. We thought this could make it to about 275 based off of this projection. I don't remember if I covered that only in a webinar, if I covered that in this video. Forgive me if I didn't cover it in the video, but that's been a projection now for a little while. I can't remember when I added it. Anyway, this is getting very close to the 75%, right, for this next leg to develop, and it's been almost a straight line. So what I've noticed, and other people have too, not just me, but when you do something like this and you get near the 75% target, which is about 268, we came within 60 cents of that, really, I think, today, which is nothing for a 267 or $8 index ETF. When you get there and you hesitate, it's a little bit bigger of a deal than getting it other places and hesitating. I don't know why. It's just a kind of a strange thing where if you push your way that far and then the hesitation happens, it's a little more concerning than if you push to say 50 or 61.8 on your extension and then it hesitates there. It just this has people, myself included, have seen reversals of significance where you would have expected to get here, and not only does it pull back, but it pulls back hard. So I don't want to put any fear out there, but I am sharing a phenomenon that I've seen and others have seen many times, many times over the years. So you can't say it failed yet, right? You have a higher close, but you got to be on watch. That's why I'm saying get ready for DEF CON because certain little factors are in there that are concerning. The diamonds pretty much hesitated all week. The diamonds hesitated all week. So I think, right, what's going on there? They've reached this target level and now they're hesitating. Is that crazy? No, it isn't. Are they overbought? Well, not on the daily, they're not anymore because they've sideways, but bigger picture charts, they're a little bit overbought or at least approaching it. So again, a pullback here wouldn't be crazy. It just, we don't know yet. We've got to wait for more data. But overall, the hesitation here is normally fine that you're consolidating and holding gains. But let's look at some of the things that are part of that. XLK, I'm sorry, I meant XLI. XLI, this thing has had one hell of a run. Would it be out of the question for that to take a breather? And I would say, obviously, no. XLB has also had a hell of a run. Things we were charting these, and you could see that they were really starting to perk up and that's important for the long term potentially. But this is, even though this thing's backed off, it's still overbought on a daily chart right now, officially at 71 RSI, which is off screen. But would it be crazy, right, after laboring around for so long to break out, get overbought, which it did, pull back, and then maybe solidify that and go? No, it wouldn't. So even if you're a bull, right, this could still make sense or not be the end of the world for sure. But I don't think you could rule out that this doesn't pull back. Now, on another note, there might be good reasons for this on the offensive side. XLRE, which can be seen as a defensive sector, look what happened here, right? So this might have a lot to do with Trump and Fannie and Freddie and all that. Potentially could all be going that way. But as my son pointed out on today's cocktail hour, look at Staples this week, right? So this is defensive, and XLRE can be looked at that way, XLV can be looked at that way, but it's all with nuanced stuff, obviously, because you've got maybe the administration coming down hard on some of these players in XLV. It's tough to say, right? Things are not just that simple, unfortunately. But look at risk off, which is XLP, versus risk on, XLY. And look how this did not have a great week, whereas the staples did. So you could say there's other reasons for that, and you might be right. It's just that looking at it in a very simplistic way, this is not really that great, right? XLU started getting a bid too. And we may as well finish it out by looking at each one individually. Former leadership sectors didn't do it. I thought XLK would finally break out because SMH was really looking good. So we went with Google as our name of the week in Rebel Pit Pro, the momentum service, but we were looking for more from. We've used SMH, so we wanted to get another ETF that could possibly work if tech did start to go as a package, and this didn't. Disappointing. A great example of maybe overthinking it or not wanting to go back to the SMH well, and we just should have, because we thought that did look good, but it happens anyway. Um, Former leadership not looking good. If you want to talk about former leadership not looking good or not helping, this is an even bigger deal. Look what happened here in XLC. This thing looks like it's rolling back over after putting in a slightly lower high. Right after all this, now you could say, oh, maybe it's a false breakdown. They're going to clear everything out in here and then they're going to rip it back up. Very well could happen, which is why we're willing to be fluid in our opinions and just go with the flow because that's what works. But right now, no, it's not looking good. Right now, it's this dip here has gotten fairly serious, and it looks like there could be more to it. So there's a former leader not only not helping like XLK while SMH jammed, but it's not doing well at all. It's actually heading the other way. And then XLE, which looked good, but news seemed to undermine it. It held in there. That could also be seen as okay, if that's going up, that's probably good too from one perspective at the very least, but it kind of got halted in its tracks. So we've covered everything. I'll bring them all over so you can see all the RSI readings on them and just see them as a package, but we did go through them pretty much all individually, and you can see that XLB and XLI are both in overbought status on the daily, as is XLRE, and you can see how this stuff is really kind of weakening when you compare this to other sectors. This is definitely weakening. And that is funny because I believe Google is in there and it held up really well. So that's telling me that Meta and other things are pulling that down. I think Meta's in that. But anyway, you get the sense of what's going on there. It's not a pretty picture because of the performance of these defensives and the lack of assertion from the former leadership areas, and the fact that you've got overboughtness in some of these things that are kind of, I call more like the Dow sectors, right? So traditionally, anyway. So there you have it. I don't think that helps you out a lot in terms of what we're looking at next. Let's see if we can bring up these. Where's my, where is my, there it is. And I don't know why Astus is on there, but We'll put spiders on there. Well, we tried to put spiders on there. SPY. Get rid of this. We don't need that anymore. But this, right, this got so good. A lot of these things got so good. Are you at the point, I'm thinking, right, are you at the point where it's going to be very hard to make them get better in the short run? Are they just due after the run they've had and so on and so forth? Are they just due for a little bit of a corrective activity? Are they due? And this is why these are some of the reasons why I've been feeling pretty good about this market and a really good rally to start the year. And we seemed like we were on our way. But even though I probably got more enthusiastic than most of you have ever heard me about how things looked, I think I did remind everyone that watches the video that when it does look that way, you almost have to do the airplane scene from Airplane, the first movie, where I think his name was Ted Hayes or something like that. He said, I asked the guy in the bar in the seat next to me in the bar or something like that to pinch me because it's like, you need to, of course they made that silly funny like they did with so many things, but that's what you have to almost ask when things look great, right? Like, wait a minute, is it really going to get better? Am I really seeing this? Does it really get better from here? So I think this is maybe the gang just being slick, maybe with news looming. I don't think it's disastrous. I still think there's really great things to support the market moving higher, but that's contingent on big picture sort of macro things. You've got fiscal policy. This has been mentioned by analysts that make a lot more money than I do for big firms, but they're making the point that you've got the legislature, fiscal stuff, you've got the monetary policy, you've got all these, you've got the synchronous monetary policy around the world, and you've got all that right at your tail as a tailwind. But it might be right that you have news that interferes first, but I think maybe these things have gotten so good that they need to just back off a little bit. If you said, well, did they look good? You'd have to say yes. But what I would say again is, do they look a little too good, or have they recently looked a little too good? And I think a lot of the readings I've seen online suggest that they have, right? That things are really look great and they don't stay looking great for too long, unfortunately. So, in terms of some of these things, some of these readings are some of the best that you've ever seen have just happened. Some of the best we've seen in a long time have happened. And in terms of your new high, new low profile, you really have to go back to the prior year to start beating this, where we were very close to recently. So, some of your best new high versus new low activity in over a year's time. And so, in other words, that's how rare it is. It doesn't happen to this extent. And you could see that maybe you just got a little bit overdone. So I'm not calling it a disaster. There's no crash call. I don't really make calls anyway, but I'm just getting at that point that uh, I think you have to be careful because you might be experiencing an analog to this right back here, that with what we've seen here, this kind of action here. So this here, let me get the pointer going again. That lets me, oh, it didn't disappear. I'm sorry, I didn't hit delete. So this here would be analogous to this area. Then you kind of get your dip, which would be analogous to this area. Then you got your rip, which would be analogous to this area. Then you've got your attempt to move higher gradually, which should be analogous to this. Then you have the last false breakout attempt and the strong reversal, which is why your friend Wayne always tells you if you can't hold levels, it's important to hedge or exit because number one, there's always going to be another trade. Number two, false breakouts. You might even want to go into looking for failed breakouts as a great entry point because they often are. And just like, even though it can be against trend, right, that's probably one of your better spots to go against the trend when it's gotten to a point and it's not able to progress and it falls back down. Same conditions apply though. What I call the quick trim, or you do a quick roll or both, right? Where you're not going for the gusto on your full piece. You're trying to do something that's going to allow you to have a little cushion in case the gang reverses it on you. But if you can get, let's say, half your contracts off for what would allow you to break even if the other balance of contracts blow up in your face completely, that's not a bad thing. And then you just free roll that other half or whatever. Maybe you can do it with only having to close a third, and you leave on two-thirds of what you have because you have a really good move down. But it's really important. They're often really good at doing things like this where they'll make it look like it's going down, and then they're going to you get in, they put you underwater for a little bit, and then you got to wait it out. This happens a lot. And then even though you think you're in you're in the driver's seat here, this thing's plunging, then they put you through this before you get this. So you're almost back to where you got in, and you're like, what happened to me, right? I had these nice winnings as a going counter trend. This is why you've got to roll, roll, roll. And when you see some kind of reversal candle or momentum shift back the other way, again, I would argue in most cases, unless there's macro news drivers that are maybe hitting the tape every day or every other day, kind of like when Kramer assured everyone that Bear Stearns was fine, you probably want to just look for another entry attempt. Make your good money, let them do their thing when you see that candle developing, close it out, let them do their thing, play games again, and then get back in when it starts careening lower again. It's hard to do because you're going counter trend and it can happen very quickly. But that's probably my assessment because I don't want to go into too much. I think that's without belaboring anything. I think that's really kind of where we want to be. I do have one thing I may be able to show. Hopefully this will show up right here. And I just want to note that on this is the LTV left tail index on the S&P 500, and this thing is creeping up, meaning, right, that the downside protection, there's a little sign, right, that this thing's coming off a major low. You haven't, well, let's pull it back. You haven't been, as of what happened right early this year, you have to go back to here in early July of 24 and then May of 24 to get readings that were similar to that. I think this is a bad tick right here, would be my guess. So that's extraordinary, right? That your risk is being was that cheap with all this stuff brewing. But we all know this does tend to happen around the holidays, which is why we tell people not to own. Ideally, you shouldn't own late. You don't really want to own late deck or Jan expirations. If you're trading a little bit longer term, you're better off. I always tell folks like you're better off owning Feb. The earnings have started by then, so I used to try to stay away from Dec and Jan, and I would own Nov and Feb around them and try to sell Dec and Jan because they are notorious for being tough to deal with all the holidays and so on and so forth. But this is picking up, right? It's not breaking out yet, but that is notable. There's a little bit of this happening over the last week or two. Plus, I don't, well, let me see if it lets me do this. Let me see if it lets me do this. Let me do SPY. And what I would note here, right, is that the market was, I don't know how that just popped up there. All right, we're going to get, I don't know what I just did there, but I must have done something. Let me get rid of this fib right now. Although all I need to really do is adjust that fib, so why am I getting rid of it? Anyway, let me see if I can pull this up. I'm not going to try to get to the penny on this, gang. I'm just going to try to ballpark it for now because I'm exhausted and you probably are exhausted of listening to me. But on this one, right, you could see that even the first fib is down there, and that's below that yellow 50, which on these trading view charts, it's similar but different. It's obviously has different graphics. I really like this though. But this here, you get into the 200. I mean, you're not even if you get to the 200, you're not at the 38. So this has been a hell of a move. I just want to give you an idea of, right, just having this kind of a pullback towards that would leave everything intact, even if we got something more dramatic that maybe a lot of people aren't expecting. I'm not predicting it. I'm just trying to show that the market would need to fall a long way at least visually and percentage wise from this point to really even threaten to break below the 200 in blue. And it hasn't even gotten close to a retracement, obviously with it being barely off the all-time high, but even coming to the first one's a pretty big drop, right? So if we do start to get corrective activity, if we do, and I'm not even predicting that as usual, I'm just saying that things are shifting and let's not get complacent. The other thing is this here is the dollar and the SPX against the dollar. And you can see if you notice that this SPX, this is a SMA that I've got on here, and you can see, right, like here's an example. You have a big corrective phase, the phase ends, and then the SPX, the ratio of the SPX to the dollar is improving. And if you notice, right, it does a very good job of telling you to stay in the trade. You have volatility, of course, like you do in anything, but it doesn't get messy until you get here right near that time when you probably would say like why not exit because I'd rather trade it again, which you'd be smart to do, I think. And then because you don't know what's going to happen next for sure, then it tells you to get back in. You get good rides on that one. You start coming down to here. Here's where it tells you to get out. Still a pretty good ride. But anyway, jumping ahead just to establish that this isn't the stupidest thing you could ever throw on your charts. Now, right, you're dabbling with levels where this ratio is falling below its SMA. So you could say, what's the big deal? Just a little bit below there. It might be, but it does happen to coincide with an analog that we looked at from back here that preceded last year's big sell-off that again happened fairly early in the year, right? It intensified into the spring. It was over pretty much by the early April, but from the top, it started in February. Could they move it up a month? And started here. And I think with the way the pattern's flashing and those megas are flashing, right, it's time to just be smart, right? It doesn't mean you bail out. Let's hope there's news that starts sending us northward when we come back in to trade on Monday on the 19th. But it's enough for me to definitely quickly get the okay, let's get ready, right? Let's prepare. Now, to summarize just verbally, a lot of readings are concerning with how the public is piled in. There's there's a lot of leverage. There's a lot of happy talk. We found ourselves in the consensus, and we're a little uneasy over that. We mentioned that last week. There's a lot. The left tail index is perking a little bit. The analog we showed, the failed breakout, the megas looking vulnerable, a lot of the breadth readings getting maybe as good as they get in most cases, and maybe they need to come down. And the sector is really looking concerning. So on balance, I'm concerned as you can tell, and that's the best I can do with no prep time for now. So I hope this helps in some way. You might like it more than what I normally do for all I know, but I just try to help out and just want to wish everyone a great weekend. I hope you get to watch this early. I would just get yourself prepared for downside put butterflies, whatever you like to do or other things you like to do. I'm still long VIX call spreads. For now, I've been trading long against them. So overall, I've been doing fine, nothing incredible, because I do this with so little time focused on it. But I've been doing fine. It's just that I I haven't let those hedges go because I just with this news cycle is still bugging me. So I keep holding on to them. They hurt me because I'm getting hurt on theta. On those things. They're that they only, as we all know, they only have a limited shelf life. But it lets me feel better about sleeping at night with this kind of administration in the world that we're currently living in, with all the sort of chaos that seems like it's unfolding in different ways around the globe. Um, so it is what it is, and I'd rather have a little bit of a hedge on that if we do get something dramatic, I'm not going to get crushed. I'll lose probably still, but it won't be as crushing as it would if I didn't have a hedge on. So I hope that makes sense. So basically I'm overcoming my hedge as it stands now in terms of the loss that I'm suffering, but I would feel a lot better if I felt a lot better, I would be a lot longer and a lot of bigger things than I am, and probably even trade the individual names I'm trading uh, with a larger size too. So on that note, and so on and so forth, thanks for tuning in. I hope something I shared with you in this video helps you out this upcoming week or some week in the future. And have a great, safe weekend as always, and we'll see you for next week's action starting on Monday. Everyone take care.